One of the things that I think I need to discuss with you when we're talking about the 34 period EMAs that make up my wave is the most common question you're probably already wondering is why 34? What makes that 34 the setting that I use? And I can get into the boring details of it, but suffice to say it was the prodding of a student of mine many, many years ago, combined with a love of Fibonacci. I am a big fan of Fibonacci retracements and Fibonacci numbers. And part of this whole quest was, why not set moving averages to Fibonacci numbers? It's probably every bit as random as setting a 100, 200 period, 50 period, or 20 period simple moving average. Those are probably as random. I think the 20 period is probably not as random because it's a lunar cycle to a lot of people. But beyond that, the 50, 100, 200, what is the significance of that really? So, there's always some sort of rationalization behind why the setting is what it is. For me, it's a Fibonacci number. So I put two charts here right in front of you because to talk about the wave, I kind of also have to talk about its cousin, the Lazy Days lines. And Lazy Days lines are actually, the strange name comes from, and I'll tell you the story in a minute, my favorite restaurant down in Isla Morada. But the 34 period, of course, I mentioned, is a Fibonacci number. I tested the series, and this was over the course of some time, I tested the series from essentially 3 all the way up to, gosh, I can't remember the number anymore, but I tested heavily from about 34, 21 really, to about 1597. And when I say tested, when I use any moving average, the close obviously is the most important, but I've been always a fan of how the highs and lows leave support and resistance behind as well. If I'm drawing a trend line, I'm not drawing close to close, I'm drawing from a touch point, which sometimes might be a high, a low, or a close. So with that in mind, whenever I try out a new moving average, I do plot it on the high, the low, and the close, realizing that they're all 3 important levels. When I looked at the 34 period of the EMA, what caught my eye right away as I was testing it was how often when prices pull back, it hit the 34 period exponential moving averages area. And that's really what caught my eye. That's the original thing. It acted as dynamic support or resistance. Now, when I was testing the 34, my charts actually looked much more spaghetti than that. And when I say spaghetti, you've probably seen it. People with just a bazillion studies and you can't even find that candle anymore, right? Well, my charts kind of looked like that for a little bit. They actually looked more along the lines of what you see here on your right. These are my Lazy Days lines. These are all Fibonacci-based exponential moving averages, all on the close. Okay, because if I was to put the high, low, and close, I mean, what the heck am I trying to determine? So the close is probably the most psychologically relevant, but what I had done and what I had noticed is not only was the 34 offering support and resistance, but it also adjusted when put on the exponential setting. It also adjusted to the direction of the market in a way that I started to see all the ideas that I had picked up from Charles Dow and market trends start to come alive, where I think, oh my gosh, look at this. There's a distribution cycle based upon the way the wave is moving. Here is an uptrend. Here's a downtrend. Here's accumulation. It just crystallized for me. I can't tell you there was some sort of conscious thought. It just clicked. I would like to say it was something more than that. Was it fortuitous? Yeah, I think it was just luck, and I'll take that any day of the week. So as time went on, I realized that prices a lot of times were still obeying some of those other Fibonacci-based moving averages, the 55, the 89, and so forth. So what I did, and let me show you here, is I started to plot these, and I included the 200 period simple as well, which I wanted to show you. I don't neglect that because, again, psychologically speaking, I don't know that there's any indicator, setting combination more relevant than that. So I started plotting the 55 exponential. By the way, why exponential? Exponential comes from the fact that I think recent price action, even though I'm looking at price action within my look back, whatever the time frame may be, where I'm not in it right now, but whenever I'm in my look back, Even though I know the right side of the chart to a certain degree is going to respect what's already happened, or the left side of the chart, I also know the right side of the chart is the now. It's the right now. And for that reason, I prefer exponentials, because exponential moving averages kind of weight the right now heavier than the left side of the chart. So it still factors in what has happened. It just places more emphasis on what has happened more recently. And for that reason, I think they're much more helpful than, say, a simple. Okay, they're much more reactive, and that's what I want. I want my wave to react to the current price to give me the best support and resistance, and my lazy days lines here too. So my lazy days lines, I just showed you the 55 period. I also have the 89, and I pick a different color for each so I know which is which. See, here I have 377, but I jumped one by accident. There's my 89. There's also one in the middle. I'll give you all these settings in a moment. I'm just showing you how I'd color them all. Oh, there it is, the 233. I don't know how that happened. So it's the 55, the 89, the 233, the 377. Here's the 610. And these are all Fibonacci-based moving averages, and these are going in succession. I'm not hand-picking certain levels. These are all going in succession from the 34 on up. Okay, 610. Here will be the 987, and then finally I have my big number, my 1597. So there are all the lazy days lines there. These actually came to light again for me. It's amazing how I rediscover things. I kind of rediscovered these when I took my new computer, I had a laptop, and I took it down to Alamorada for the day, and I told my husband, I'm going to keep an eye on the market, my little wireless card, and see what's going on. And then I realized that on my brand new laptop, I had not installed some of the indicators, like my automated support and resistance from the PRS and some other tools. And I thought, wow, I don't mind doing this stuff manually. Obviously, I know how to, but I love the automation. Is there something I could whip up real quick? And I thought, gosh, I talk about the exponential Fibonacci, the Fibonacci-based exponential moving averages. Why not just get those back up on my chart? And I did that for the first time in lieu of some of my other tools while I was at my favorite restaurant, Lazy Days. And so I just called them my Lazy Days lines. And, it's amazing how I wish I would have taken better time to name these tools that I have, but I never think about the fact that one day I'll be teaching them. So that's where that's where names as boring as the wave came from my love of surfing, and the fact that it looked like prices sometimes surf the momentum of the wave in a markup or markdown cycle. And, so anyways, that's the story behind Fibonacci-based moving averages. Now, I got to tell you real quick. I'm going to give you a 1-minute synopsis of what I think internal psychology is. It's the 3 C's. The 3 C's. I love alliteration. It is comprehension, confirmation, confidence. I can tell you all this stuff until I am blue in the face. It is your job, it is your responsibility now to put these tools on your chart and see if you see what I'm seeing when you use the guidelines that I teach. So the bottom line is, until you understand or comprehend what I'm teaching, you cannot go into the market and then in demo or in practice or analysis confirm it. So from comprehension, from understanding, then comes testing out or confirming. When you understand and confirm things enough, eventually you'll get this feeling, and that feeling is confidence. Okay, for some people it doesn't take very long. For others, it takes a long time to get through the stage of comprehension, then to confirmation, to finally confidence. And I don't know how long that's going to take for you. So what I can say is I can teach you all these tools, and it's just my opinion, it's just my ideas, until you can go ahead and say, oh, I believe it too. I'm not assuming that you're going to just take this on face value and run with it. I do want you to test it. I do want you to question it. So that internal psychology comes down to really just 3 C's. Comprehension, confirmation, and then finally that equals confidence. Take the time to understand, to comprehend what I'm teaching, then go test it. So basically you can move on to the second stage, confirmation, and see if you're seeing what I'm seeing as these lines, these Fibonacci-based exponential moving averages offer the support and resistance that I think they do very, very well.